This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.au. Hello, everybody. Welcome again. Another edition, 18 minutes with 180 Markets. Investors, we all know that Australians by nature are explorers. And for us, sadly, that are stuck in Victoria, a few of us have ventured up north, up to Sydney, Northern Territory, and we're going to discuss today PNG, which is even a little bit further up north. And we're going to talk to Grant Craighead from Canterbury Resources all about his Northern Australia or PNG assets in the copper, gold, silver area. Enough with me. Grant, welcome to 18 Minutes with 180 Markets.
Thanks, Greg, and thanks for that introduction. And welcome to your investors.
Thank you. Hey, Grant, people invest in people as much as they do projects. Can you just tell us a little bit about your story? How did you get to where you are today?
Okay. Well, there's a clue in the name, Canterbury Resources. I originally came from Canterbury in New Zealand, or Christchurch, and that's where the name of the company came from. I was a geologist by training, and very quickly, when you're born in New Zealand and become a geologist, you move to Australia, land of opportunity. So after working for 6 months in New Zealand, wandered over to Australia and never made it back. That's life, and it's a great place to be and great opportunities. But I spent, I suppose, 10 or 15 years as a geologist. Became chief geologist for Elders Resources and spent a lot of time in Queensland and Papua New Guinea. During that phase, we started a few mines, Red Dome, Kidston, Selwyn, and we went up to PNG and started working on a few there. Wafi was one, and we were lucky enough to discover the Golpu zone during that phase. And unfortunately, like all good things, they come to an end, and Elders self-destructed when interest rates went to 17%. They got a bit overgeared. And I took that opportunity to switch from a geological career into the finance world. So tied into places like Macquarie Bank, spent 5 years there as an analyst in the equities game, learned a bit about that. And then spent a time in the funds management world. Got together with an old former colleague from Macquarie, and we formed a research house, funds management house, bit of private equity. Always with a focus on resources, though. We didn't abandon our geological roots, and spun a few companies out during that period. Put together one of them, Anchor Resources, I don't know, 15 years ago. Eventually sold that out to the Chinese. It was chasing antimony, and the Chinese were very keen on antimony at the time. But many of the directors, shareholders and followers of Anchor then threw their hat in and helped me form Canterbury Resources back in 2011. We sort of put together, tried to come up with a bit of a strategy of where should we be operating, what should we be doing. And a common thread amongst the management team, exploration team, was that we had real expertise in the Southwest Pacific, chasing porphyry, copper, gold, epithermal gold style systems. And so we wanted to leverage off that knowledge base. And so we patiently sat there over the last, 9 years or so, and built a portfolio based on that knowledge. And I think an opportunity came at that time because a lot of the majors were pulling back from grassroots exploration. So large-scale porphyry copper style systems used to be the domain of the majors, but in the post-GFC or during the GFC period, they pulled themselves back to really brownfield exploration or expansion of existing operations rather than grassroots exploration. And a lot of good ground started opening up during that period, and that's what we were able to take advantage of. And that was really the genesis of Canterbury and where we've got to today.
Yeah, and I suppose, tie into, you came from, as you said, from New Zealand, because Australia is the land of opportunity. So obviously, by definition, you're an opportunist.
Yeah,
So you saw the opportunity up there. And also, I guess the other point I pick up is that, you certainly, unlike some other people, you have a clear strategy, what you call like Southwest Asian or Northern Australia, if you will, a very specific focus where you think you have, domain expertise. Um, can you just drill down maybe a little bit more about
sure.
that location and maybe a little bit more about your projects themselves?
Yeah, sure. So in terms of location, well, I think also talking about people, on our team, we've got our exploration manager, Mike Ersig, who's operated in the Southwest Pacific, Asia Pacific region for the whole of his career, chasing this style of deposit. And we've got some in-country expertise with Wanu Tamu, our country manager, who handles that or mitigates that sovereign risk side of the business and handles the logistics side of that business. Drilling down then into the company, I guess most people understand why you're in PNG, because it is a bit like Australia, a land of opportunity. Australia is obviously lower sovereign risk and more picked over. PNG is a bit younger. It still has the very big deposits, and you can still find the elephants relatively easily, albeit with some differing challenges to Australia. So our strategy, I guess, was that because I'd operated in that environment, Mike certainly to a large degree had operated in that environment, and Wanu as well. We wanted to pick up those sort of assets, but we had to mitigate the challenge of what is an expensive strategy while being a junior resource company in Australia. So that's where we sort of like to take a portfolio approach of picking up a handful of these style of assets, doing the cheap on-ground work that we're efficient at. We have a strong knowledge base to leverage off, that style of thing. And then once we've advanced assets and opportunities to the point where they're ready for an expensive drilling phase, reach out to our network amongst the larger companies and try to do joint ventures and get them to mitigate both cost and risk for us. And at the end of that process, hopefully we've got half a dozen opportunities on the go at any particular time. It might be a couple in drill phase at any particular time. And if we can retain through joint venture structures 20, 30, 40% exposure to a world-class tier one copper gold or epithermal gold style project, that's potentially worth billions of dollars, multiply that by whatever we retain, and you've got a multiple of our market cap that's attractive to most investors.
I'd say it's almost like I'd rather be a small minnow in a big pond, so to speak. Is that accurate?
Absolutely, absolutely. I mean, we're retaining a lot of tickets in the game, if you like, and spreading that risk as far and wide as we can, and it becomes a numbers game. The more tickets you can get in the game, the better chance you've got of winning, and if you can get someone else to pay for those tickets on the journey, even better.
Yeah, I suppose it's almost like your financial, and I'm curious, you, as you said, you were in funds management. One of the things that we're always talking about is diversification on one hand, on
Yeah.
the other hand, domain expertise, if you will, and marrying those two factors up. That sounds like what you're really doing at Canterbury, which is you have domain expertise, but at the same time, trying to run a diversified portfolio?
Absolutely, and I think you draw a good point there that across the board and management, we have pretty much equal expertise in managing business, managing funds, and exploration. And I think that helps differentiate us from many in the marketplace, because I guess a lot of junior companies come out of a very enthusiastic alpha character that really believes in some geological concept or area or whatever, but doesn't always have the broader skill set or the team around him to work out how that best fits into the overall picture. And we like to think we tick most of the boxes at Canterbury. Yeah.
And I've been even adding to that point, we have a saying that sometimes you can actually have a great process and still have a poor outcome because that's just life. And
Yeah,
that's why you have a diversified portfolio, so to speak.
exactly. Couldn't agree more. Yeah.
And can you just go into then maybe a little bit though more now about your particular projects?
Okay. I'll highlight two or three basically. We talked about partnerships before, so I'll think from north to south. Our northernmost asset is up on Manus Island, better known for things other than copper and gold in recent times, but it's actually an area that's very well mineralised, but no one's ever found the big deposit there, and people have been chasing it for a long time. So we're there at the moment, looking in the sort of central southern part of Manus, and in that area there's sort of these large alteration lithocaps that are potentially masking large-scale deposits, and Rio Tinto's a joint venture partner with us on that one, and they ran a lot of geophysics that sort of lit up some large-scale targets. Now, unfortunately, they ran into some challenges once they started trying to drill these, and they're trying to work through reinventing how best to drill those projects and how to manage that. So we're sort of working through a process, but we'd hope to get back in there and start re-drilling those middle of next year, I suspect, is probably a best guess. And they offer the opportunity, using someone else's budget, to retain a significant proportion of a target that's attractive to the majors. So that's sort of, I guess, an example of the style of project and opportunity and partnership that we're looking to do. Moving down into mainland PNG then, we sort of first got involved in the Akuti Range area. We've now accumulated, I guess, 3 assets adjoining there, covering a bunch of prospects that range from narrow high-grade epithermal style veins that are have been drilled to a small degree, and they're narrow high-grade things and worthy targets in their own right, but they're probably peripheral to porphyry systems, and they represent the sort of larger scale target. And Newmont was in there looking for those style of things and pulled out of the country, and we got on well with them, and they sort of gave us the nod that this ground was probably well worth picking up, but if you find something, come and knock on our door and thank us by and bring us back into the area. So
Absolutely.
We've been operating up there. Look, just to the east of us, the Hidden Valley Gold Mine operates, a couple of 100,000 ounces per annum, and to the north of us, 50 or so k's north, is the Wafi Golpu complex, and that's owned by Newcrest and Harmony. Major project, like 19 million ounces, 9 million tonnes of copper as well. Very large scale project in the sort of approvals process. And we, as I mentioned earlier, we were involved in the discovery hole at Golpu, so it's near and dear to our heart. And it's an area we know and understand well. So that's sort of why we got into the area. And then we were following market positions, I guess, more recently. Back in February, a ground just adjoining northwest of Wafi Golpu came open, and this piece of ground hasn't been open for a very long time, so we jumped on that, and that's the Walmam area, and it included sort of 2 prospects that have been drilled over the last 40 years. Like these things are a bit of a slow burn.
Wow.
CRA discovered it back in the 80s, along with Wafi when they were exploring in that area. They did a little bit of drilling, and then every 10 years or so, another company had come in and have a crack. Highlands Gold got in there, did some drilling. Barrick Gold got in, more recently Newcrest. So, all big companies that are used to chasing things, but none of them sort of got that instant gratification, or the commodity prices weren't right, or, for reasons best known to them, they pulled out of those areas. Anyway, we picked this area up and were slowly accumulating data. Whoops, excuse me, my phone, Siri wants to help us over here.
That's okay.
Yeah, technology, you gotta love it.
Absolutely.
So we started gathering data, all the data that had been lodged by the mines department and the like, and found that the project was perhaps a little more deeply evaluated than we'd realised. So when we were trying to put up a exploration target or generate an exploration target, we did some 3D modelling and found that the deposit was actually well enough drilled and understood to be able to actually put mineral resources on it. So we modelled that up, and a month or two back released resources for two deposits, Wammam and Idzang Creek.
And that was a big surprise.
Yeah, that was a very pleasant surprise for us. And I think the market's only just sort of coming to grips with that. Idzang Creek in particular, it's best part of about 100 million tonnes of a gram equivalent. So there's more than a couple of million ounces there and a few 100,000 tonnes of copper. Sticks out of the ground, strike length of 900 metres, goes to 600, 700, 800 metres so far that we know of. Could be getting better with depth by the look of things. Needs more drilling, but there's a coherent deposit there, good continuity, a lot better than we thought. Very pleasant surprise.
And what would be the upcoming drilling schedule, so to speak? How would the next 12 months look in your mind?
For that project or for across the board?
Well, I suppose both, but specifically here.
Yeah. So at Idzang Creek, essentially over that 900 metres, there's drilling sort of every 200 on section lines 200 metres apart. So we'd look to infill that to 100 metre section lines, plus it hasn't been closed off at either end. So we'd look to do that. Some lines have been well drilled at multiple depths. Others would only have either a bit of shallow drilling or a bit of deep drilling on. So there's obvious gaps in the system.
Yeah.
However, the statistics are showing up that every line is mineralised. It's coherent, it's consistent. We're remarkably surprised. And I suppose it's, as one journo kindly put it, it's the cheapest discovery he'd seen in a very long time. And
yeah,
I have to agree with that. At one level it fell into our laps, but at the other level it only fell into our laps because we've been looking at it for 40 years.
You have domain expertise.
And we knew what we were looking at, and that's the advantage of getting old, I guess.
Well, getting older maybe, but I suppose it's always that that ability to execute quickly comes from having that expertise in that area. If it was in a different part of the world, you may not have been able to act so quickly.
Absolutely. There's two things, as you point out: understanding what you're looking at, and two, just having the legal framework in place, the approvals in place, the company structure within PNG, the investment promotion authority licensing to operate in country. You have to have technical expertise, financial expertise to put in an application and get it through the approvals process. So all those building blocks were in place and allowed us to be nimble and beat the competition.
And Grant, when we think about, we can't help but compare ourselves. It's just the way that we're built again. When we think about Canterbury, where you stand, your market cap, and yes, we know it's early days, but you do have a resource there. PNG maybe has some more sovereign risk than certainly Australia, but it's not like other places in the world don't either. Just how do you see our market cap currently versus where the competition would be, so to speak?
Yeah, well, if you treat us just as a gold company, and Idzang Creek suddenly become our most advanced asset, we've got 2.5 million ounces in that whole Wammam Idzang Creek complex, and that would value us at around $5 an ounce, at our current 14-15 million market cap. Looking at our peer group, typically they'd be 50 million $50 an ounce, which obviously gives us a lot of upside as we work it, Woman through the approvals process. So I think there's a couple of things there. Well, I'd also back off and I say if we were in Western Australia, it might be another multiple again. I was chatting to
Sure.
one investment group the other day, and he said basically, I can't find any value in WA anymore, so tell me about yourself. You just look ridiculously cheap compared to what I'm looking at in my own backyard. And WA has run very hard, and there's been some great success stories there and a lot of value generated for shareholders. But the risks are suddenly looking in both directions when you're investing in a WA gold opportunity, whereas our risks are skewed to the upside, based on valuation parameters only. But the key to getting that recognised is we're working through the approvals process. We've just successfully held a Warden's hearing to listen to the local community. They're supportive of Canterbury coming in and operating. It's now just got to go through the normal regulatory approval, so we'd expect that to get, takes some months. We're also operating in a COVID environment. We think, like, we're gathering data, working up a drill plan. We can see something like potentially you could justify 5, 6, 7,000 metres of drilling on this asset to get it up to the level where you could move it into scoping study.
Right.
That program, could be implemented within 2 or 3 months of the license being granted. So again, ideally, that drill program would operate through the middle phase of next year, if all the ducks line up and the
Right.
like.
And you just came off a recent capital raise. Can you just tell us about the capital raise position, which I assume would help fund some of that drilling as well?
Yeah, the capital raise, we've raised a couple of $1 million, and that really is designed to actually not go straight into drilling, but we'd look to use joint venture parties or similar to fund most of the higher risk drilling phase of stuff. So we looked at the COVID environment and said, what's the greatest risk to Canterbury? And that's getting squeezed for cash. So we wanted to de-risk the company for cash flow. So we said, okay, what do we need to do to take capital raising off our books for the next 18 months? So we put in place, we'll raise enough capital to allow us to do our normal corporate behaviour, which is run the company, do low-level field work,
Sure.
work up drill targets. Don't have to think about that till 2022. And then we'll focus on advancing all of our major or larger targets through to the point where we can introduce third parties to fund high-risk, expensive drilling phases. And we've probably got 4 on our books at the moment. So I'd say between the Bismarck project on Manus Island, Idzan Creek, the Cootie Range Complex and Briggs down in Queensland are all at that drill ready phase where we think we've got targets that are able to take us to the next tier. And we're in broad ranging discussions, early days with, 5 or 10 of the larger companies out there in the world, and they variably have interest in each of those assets. And it's a matter of trying to consummate those deals over this sort of COVID environment where it's hard to do a lot on the ground, but we can add a lot of value for shareholders by doing a good joint venture structure. And at the same time, it's quite interesting that the majors have clearly been told to take advantage of a good crisis and go out there and put your foot on good copper opportunities in particular. Right. There's a real change over the last 12 months where the larger companies all see copper as sort of the next metal that you've got to have exposure to. There's a shortage of large-scale, world-class copper assets in the pipeline.
Yeah.
And when you chat to the majors, most of them see it as a cornerstone of their growth aspirations in that 5, 10, 20-year horizon.
Yeah, absolutely. We're seeing the same phenomenon, and as you know, these assets don't get built overnight. So
No.
That's for sure. And we have record demand numbers out of China. Those are very short-term numbers, but still, I think it shows that they are the elephant in the room, so to speak. Grant, we have to wrap it up, unfortunately. Are there any closing
Okay.
comments that you have for our audience, though?
Oh, no. Just climb on board and enjoy the ride. What we're doing is trying to provide a very high leverage, high risk, but mitigated where possible, opportunity to drive shareholder wealth. And, we're having a lot of fun doing it. And we think we provide a multitude of opportunities that give us a chance of hitting the bullseye. So thanks for your time.
Thanks, Grant. Appreciate it. Be in touch.
Okay. Cheers, Greg.
Bye-bye. Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.